Good evening. This is Doc Severson for the TheoTrade report for Tuesday, January 16th. Okay, here's what we've seen in the S&P futures just since last Friday. So last Friday, the futures closed around the 2790 level. All right, so we're getting close to 2800, even though that's not been the story lately. I'll talk about the Dow in just a minute. And then from there, 2790, they rallied a little bit on Sunday night into Monday. Yes, the futures are trading just a little bit over the MLK holiday. And then we saw Tuesday morning come along, and then this is where the overnight rally started over in Europe and beyond, right? So we ended up the day shortly after the cash open, up 18 points from Friday's close. And this is on top of the two strongest weeks to begin a year that we have seen in a long, long time. So here we go. Here comes the climax bluff. And this is where we started to see the weakness coming in. Okay, so from the top at 2808, we've actually dropped 38 points before leveling out a little bit into today. So that's a little bit different than the price action that we've seen the last 2 weeks. Here's the same action on the Dow. Here's the closing price on Friday afternoon, which is about 25,801, and rallied another 260 points before finally finding some weakness, again, above that 26,000 level that everybody seems to care about. Now, what this has created as we look across the major index charts has been a series of reversal bars. These are not key reversal bars quite. So a key reversal bar, if we zoom on this, would be a higher high and a lower close than the low of the previous day, and which would be Friday. So it's almost there, but not quite. So this is a reversal bar with a higher high and a lower close for the day, but not a key reversal bar. But that's not quite the case for the Russell. The Russell was a key reversal bar by far. So this is also a bearish engulfing pattern. Whatever you want to call it, it doesn't matter. This is a fairly bearish candlestick for the Russell. The Russell had the mantle of being the only index chart out there with possible energy to keep rallying. So we were looking upon the Russell as the heir apparent to be able to grab the baton from all the other exhausted index charts and be able to perhaps squeeze a few more points out to the upside to continue this rally into the third week of 2018, but it was not the case. And in fact, the Russell was by far the weakest of the three. Here's the Dow, and the Dow, again, this is a reversal with a higher high and a lower close than Friday, but not a key reversal like is in the Russell. Again, I should mention that for the majority of these index charts, I'm seeing a historic level of exhaustion at the monthly, the weekly, the daily charts. All three time frames are showing linearity exhaustion to the upside. I have never seen this level of exhaustion across all three time frames. We've been banging on the table about this for months without result. So a part of this has been that the market is just in absolutely euphoria to the upside. And a lot of the strongest gains come at the very end of a euphoric move like this. So I'm not necessarily projecting that this is going to be the end of it, but we could go into the next consolidation phase, or even, as I had talked about a long time ago, a soft back half of January. So finishing out the index bunch, here is the Nasdaq Composite. We're also seeing another reversal bar, but not a key reversal bar. As we can now also note that the Nasdaq is in triple exhaustion, monthly, weekly, daily. These are extreme values that we are only going to see in a market in euphoria, with this whole notion of fear of missing out driving a lot of the market. Now, this is not the only problem out there. This is the dollar index. The dollar index has been extremely weak, especially over the last 4 days. To some degree, with dollar assets dropping like this, stocks have to increase just to retain par value. And here's a chart of the Treasury bond futures, and we're not quite seeing them crash either, even though Bill Gross has talked about bonds being in a bear market. So perhaps the most telling thing was looking at the volatility futures today. So even with the weakness coming in, again, S&P is coming 38 points off of the high. The most that we saw was just a quick little movement here At one point during the weakest part of the day, the vol futures were up 7%. That was it. So we're not going to see anything reasonable in terms of a big movement in equities until we see this trend line broken on the volatility futures and we start to see volatilities in the mid-teens and above that. Then we'll start to see some movement here. So at this point, what am I looking for in the back half of January? As we're getting to that point now, we're getting to the back half of January. What am I looking for? Well, a soft patch into this. And again, what I was looking for at the beginning of the month was a sideways beginning to this and then a 3 to 5% correction. So now perhaps I'm just going to tack that 3 to 5% correction onto the top of this. I think the best that we can hope for if we want two-way tape is a retest of the 50-day moving average, but I would not put it as much more than that, and that will lead to higher prices going forward, at least on the first go round. That is it for today's report. Thanks for listening, folks. We will see you tomorrow.